Need cash fast? Payday loans explained. Life throws curveballs. Your car breaks down, the fridge dies, or an unexpected medical bill arrives. Suddenly you're scrambling for cash. Enter payday loans, offering a quick fix for those short-term financial emergencies. But are they too good to be true? Payday loans are short-term, high-interest loans designed to tide you over until your next paycheck. They're easy to get, often with minimal requirements, but that convenience comes at a steep price. Before you jump into a payday loan, it's crucial to understand the ins and outs. We'll break down everything you need to know about payday loans, from how they work to the potential risks involved. Let's dive in. Payday loans, how they work, who they're for. Imagine this, it's a week before payday and your car battery decides to call it quits. You need your car for work, but you're short on cash. A payday loan might seem like the perfect solution. Here's how it usually works. You walk into a payday lender, show them your pay stub and ID, and write a post-dated check for the loan amount plus fees. They hand you the cash, and you're good to go until your next payday. When payday arrives, the lender cashes your check, covering the loan and fees. Sounds simple, right? But here's the catch. Payday loans come with sky-high interest rates, often exceeding 400% APR. That's far higher than traditional loans or credit cards. So who are payday loans for? They're marketed towards people facing short-term financial crunches who might not qualify for other forms of credit. But the truth is, payday loans often create more problems than they solve. The good, the bad, and the ugly of payday loans. Let's be real, payday loans have their ups and downs. On the one hand, they offer quick and easy access to cash when you need it most. No lengthy application processes, no credit checks, just fast cash in your hand. This accessibility can be a lifesaver in a genuine emergency. Imagine having to cover an unexpected medical bill or prevent a bounced check that could wreck your credit score. But here comes the ugly truth. Payday loans are notorious for their predatory lending practices. Those sky-high interest rates and short repayment terms can trap borrowers in a vicious cycle of debt. It's like trying to put out a fire with gasoline. You might get a temporary fix, but you'll likely end up with a much bigger problem. Payday loans versus other loans, a head-to-head. How do payday loans stack up against other types of loans? Let's break it down. Payday loans versus personal loans, interest rates. Payday loans have the highest interest rates, often in the triple digits. Personal loans offer significantly lower rates, loan amounts. Payday loans offer smaller amounts, usually a few $100s. Personal loans allow you to borrow larger sums. Repayment terms. Payday loans demand repayment on your next payday, putting pressure on your budget. Personal loans offer more manageable repayment periods. The bottom line, while payday loans might seem like the fastest solution, they often come with a hefty price tag. Exploring other loan options or seeking financial assistance from reputable sources is always a wiser move. Section 5, before you jump in. Alternatives to payday loans. Don't let a financial emergency drive you into the arms of a payday lender. There are better, safer ways to navigate those tough times. Here are a few alternatives to consider. Emergency fund. The best defense against financial emergencies is a healthy emergency fund. Aim to save at least 3 to 6 months' worth of living expenses. Family and friends. Turning to loved ones for help can be a sensitive topic, but it's worth considering if it means avoiding a payday loan. Negotiate with creditors. If you're facing a temporary setback, reach out to your creditors and explain your situation. They might be willing to work out a payment plan or offer a grace period. Credit counseling. Non-profit credit counseling agencies can provide guidance and support in managing your finances and exploring debt relief options. Small dollar loans. Some credit unions and community banks offer small dollar loans with more reasonable terms than payday loans. Remember, taking the time to explore these alternatives can save you from a world of financial stress in the long run. Section 6. Need help with debt? Here's what to do. Feeling overwhelmed by debt? You're not alone. Millions of Americans struggle with managing their finances and finding a way out of the red. The good news is there's hope, and there's help available. First and foremost, take a deep breath and acknowledge the situation. Burying your head in the sand won't make the problem go away. Instead, face it head on and start taking steps towards a brighter financial future. Start by creating a realistic budget that tracks your income and expenses. Identify areas where you can cut back on spending and redirect those funds towards debt repayment. Section 7. Avoiding payday loan traps. Tips for smart money management. Preventing financial emergencies is better than scrambling for solutions. Adopt smart money management habits to handle unexpected events without payday loans. Here are a few tips to keep your finances on track. Track your spending. Know where your money goes to identify areas to save. Use budgeting apps, spreadsheets, or a notebook to monitor income and expenses. Create a realistic budget. Align your budget with your income and expenses. Allocate funds for necessities, savings, and debt repayment. Build an emergency fund. Save 3 to 6 months' worth of living expenses. Automate your savings. Set up automatic transfers to your savings account. Small, consistent contributions add up over time. Implement these tips to avoid payday loan traps and secure a brighter financial future. Section 8. Building a solid financial foundation. Think of your finances like constructing a house. You wouldn't start with the roof, would you? You'd begin with a strong foundation to support the entire structure. The same principle applies to your financial well-being. A solid financial foundation provides stability, security, and the freedom to pursue your goals without being weighed down by debt or financial stress. Here are the key building blocks. Emergency fund. This is your financial safety net, providing a cushion to absorb unexpected expenses without resorting to debt. Aim to save at least 3 to 6 months' worth of living expenses. Debt management. Having a plan to tackle existing debt is crucial. Explore strategies like the debt snowball or debt avalanche to accelerate your progress and become debt-free. Budgeting. A budget acts as your financial roadmap, guiding your spending and saving habits. It ensures you're allocating funds wisely and working towards your financial goals. Building a solid financial foundation takes time and effort, but the rewards are well worth it. Section 9. The importance of emergency funds. Imagine this: your car breaks down, your refrigerator goes kaput, or you face an unexpected medical bill. These situations are not a matter of if, but when. That's where an emergency fund comes in. Your financial superhero ready to swoop in and save the day. An emergency fund is a dedicated stash of money set aside specifically for unexpected expenses. It's not for vacations, new gadgets, or impulse purchases. It's your financial safety net, providing peace of mind and preventing those unexpected events from derailing your financial stability. How much should you save? Aim for at least 3 to 6 months' worth of living expenses. This might seem like a daunting amount, but remember, it's a marathon, not a sprint. Section 10. Seeking help from credit counseling agencies. Navigating the world of personal finance can feel overwhelming, especially if you're facing debt or struggling to make ends meet. The good news is, you don't have to go it alone. Credit counseling agencies offer a lifeline, providing guidance, support, and resources to help you regain control of your finances. These non-profit organizations employ certified credit counselors who can provide personalized advice and develop a tailored plan to address your specific situation. They can help you create a realistic budget. A credit counselor can work with you to develop a budget that aligns with your income, expenses, and financial goals. Negotiate with creditors. If you're struggling to make payments, a credit counselor can act as a liaison between you and your creditors, negotiating for lower interest rates, waived fees, or modified payment plans. Explore debt consolidation options. If you have multiple debts, a credit counselor can assess whether debt consolidation is a viable option and guide you through the process. Remember, seeking help is a sign of strength, not weakness. Section 11. In conclusion, choose wisely, choose freedom. We've journeyed through the ins and outs of payday loans, exposing their allure and their potential to wreak havoc on your financial well-being. While those quick cash promises might be tempting, especially in times of need, it's crucial to remember that true financial freedom comes from making informed and empowered decisions. Building a solid financial foundation takes time, effort, and discipline, but the rewards are immeasurable. It's about taking control of your money rather than letting it control you. It's about breaking free from the shackles of debt and creating a future where you call the shots, so choose wisely. choose freedom. Choose a path that leads to financial peace of mind and a brighter future. If you found this video helpful, please like and subscribe to our channel for more insights on financial freedom.